Welcome to UXL, where you can learn new skills anytime and anywhere. Visit uxl.com to explore our full course selection. This lesson is part of a larger course. Check the video description below for a link to the full course where you can enroll. If you enjoy our content, please like and subscribe. For your convenience, the course cover displayed on your screen provides the complete course title and lesson title. Let's proceed with the lesson. Lesson: Payroll Deductions and Final Pay Requirements. Payroll deductions and final pay requirements in California represent critical elements that HR professionals must master to ensure compliance and efficiency within their organizations. California's wage and hour regulations are among the most stringent in the United States, and understanding the intricacies of these regulations helps HR professionals navigate the complex landscape of employment law in the state. California requires employers to make certain deductions from employees' wages, and these deductions can be categorized into mandatory and voluntary deductions. Mandatory deductions include federal and state income taxes, Social Security and Medicare taxes, and unemployment insurance. These deductions are required by law and must be calculated accurately to avoid penalties. Voluntary deductions, on the other hand, are those that the employee has authorized, such as contributions to retirement plans, health insurance premiums, and union dues. These must also be handled with precision to ensure compliance with both state and federal laws. One of the critical aspects of payroll deductions is the withholding of taxes. Employers in California must withhold federal income tax based on the employee's W-4 form and the IRS withholding tables. They must also withhold state income tax, which can be more complex due to California's progressive tax rates. The state provides its withholding schedules, and employers must use these to determine the correct amount to withhold from each paycheck. The accuracy of these deductions is paramount, as errors can lead to significant financial penalties for the employer and potential financial hardship for the employee. Another vital component of payroll deductions is the calculation and withholding of Social Security and Medicare taxes, collectively known as FHRca taxes. The Federal Insurance Contributions Act mandates that both employers and employees contribute to these programs. As of 2023, the Social Security tax rate is 6.2% for both employers and employees, up to a wage-based limit of $160,200. The Medicare tax rate is 1.45% for both employers and employees, with no wage-based limit. Additionally, employees earning over $200,000 are subject to an additional 0.9% Medicare tax, which is not matched by the employer. Employers must accurately calculate and withhold these amounts to ensure compliance with federal law. California also requires employers to withhold unemployment insurance and employment training tax from employees' wages. The UI tax funds unemployment benefits for workers who lose their jobs, while the ETT funds job training programs. The UI tax rate varies based on the employer's experience rating, which reflects the stability of their workforce and the amount of benefits paid to former employees. The ETT rate is fixed at 0.1% of the first $7,000 in wages paid to each employee. Accurate calculation and timely payment of these taxes are essential to maintaining compliance with state law and avoiding penalties. Voluntary deductions, while not mandated by law, must still be handled with care to ensure compliance and maintain employee trust. These deductions often include contributions to retirement plans, such as 401 or 403 plans, health insurance premiums, and union dues. Employers must obtain written authorization from employees before making these deductions and must ensure that the amounts deducted are consistent with the employee's authorization. Additionally, employers must comply with federal laws governing these deductions, such as the Employee Retirement Income Security Act, which sets standards for retirement plan administration and fiduciary responsibilities. Final pay requirements in California are another critical area that HR professionals must understand thoroughly. The state has specific rules regarding the timing and amount of final pay when an employee is terminated or resigns. If an employee is terminated, the employer must provide the final paycheck, including all wages owed, immediately upon termination. If the employee resigns with at least 72 hours notice, the final paycheck is due on the last day of work. If the employee resigns without notice, the employer has 72 hours to provide the final paycheck. Failure to comply with these requirements can result in significant penalties, including waiting time penalties equal to the employee's daily wage for each day the final paycheck is late, up to a maximum of 30 days. Final pay must include all wages earned through the last day of work, including regular wages, overtime, and any accrued but unused vacation time. California law requires employers to pay out unused vacation time as part of the final paycheck, as vacation is considered earned wages. Additionally, any other compensation owed to the employee, such as commissions or bonuses, must be included in the final pay. Employers must ensure that all deductions are properly accounted for and that the final paycheck is accurate to avoid disputes and potential legal action. An example of the importance of compliance with final pay requirements can be seen in the case of McLean v. State of California, where the California Supreme Court ruled that state employees who were terminated or resigned were entitled to waiting time penalties if their final pay was delayed. This case underscores the importance of timely and accurate final pay and the potential consequences of non-compliance. Employers must also be aware of the requirements for providing employees with an itemized wage statement, also known as a pay stub, with each paycheck. California law mandates that the wage statement includes specific information, such as the gross wages earned, total hours worked, all deductions, net wages earned, the pay period dates, and the employer's name and address. This requirement applies to both regular and final paychecks. The wage statement must be clear and accurate, as errors or omissions can result in penalties and potential legal action. In conclusion, payroll deductions and final pay requirements in California are complex and require meticulous attention to detail to ensure compliance with state and federal laws. HR professionals must be well-versed in the various types of deductions, the rules governing final pay, and the requirements for itemized wage statements. By mastering these elements, HR professionals can help their organizations avoid costly penalties, maintain employee trust, and ensure a smooth and efficient payroll process. The importance of accuracy and compliance in payroll cannot be overstated, as it directly impacts both the financial well-being of employees and the legal standing of the employer. This concludes the lesson. We trust you found this video informative and engaging. To enroll in the complete course, please use the link provided in the description below. At UExcel, we are committed to your learning journey. Each course offers a certificate of completion, online support, and downloadable resource files to enhance your experience. If you found our content valuable, we invite you to like this video and subscribe to our channel. Thank you for joining us, and we look forward to supporting your continued pursuit of knowledge.